Hello everyone, welcome back to the online learning of Advanced Accounting at Accounting Department Sekolah Tinggi Ilmu Ekonomi Perbanas Surabaya. And today you are with me again, Lufi Yuwana Mursita. We would like to continue our discussions about partnership liquidations, and specifically today we would like to discuss about cash distribution plans. After we are talking about self-distribution schedule, today it is very relevant for us to talk about the other kinds of the other support for the liquidations process. It is the cash distribution plans. So let us start from now. Well, everyone, just like we have talked about the safe payment schedule at the previous meeting, it is a kind of schedule that used by the partnership to make the calculations about the amount that can be distributed to the partners, and that amount cannot be returned again to the partnership. So there are several advantages of the safe payment itself. The first one is that it is an effective method of computing the amount of safe payments to the partners, just like the function itself. And the second advantage is it is also an effective method of preventing excessive payments to any partners. But regardless this advantage, there are several disadvantages that can be found in the safe payment schedule. The first one is that it is less or inefficient if numerous installment distributions are made to partners. So it means that the number of the installment or distribution itself should be limited for making the safe payment can be function well. And the second one is that it doesn't provide information that will help the partners project when they can expect to be included in cash distribution. So here, because of this deficiency or kekurangan-kekurangan in the safe payment schedule, there are the other method or the other form that is used to help or support the functions of the safe payment schedule during the process of liquidation in the installment method. So what we need to overcome the deficiencies of the safe payment schedule, it is the cash distribution plans, or also called as cash-free distribution plan. Just like I have mentioned before, because of the name of this plan is the pre-distribution, so it means that the function is to make the planning of the distribution, and it is made at the start of the liquidations process. So here it is the kind of steps or form that is used to reduce the deficiencies or the ineffectivity of the safe payment schedule. It is the topic today, and we would like to talk about the process to make the pre-distribution plan. So now let us start for the instruction to make the cash distribution plan. So there are 3 steps that we have to follow in preparing this type of plans. The first one is by determining the vulnerability ranking of each partners. The second step is preparing a schedule of assumed loss absorption. And the third one is the development of cash distribution plan as the last step for the cash distribution plans preparations. So let us start from now to discuss about each of the steps. We would like to use an illustration still related with the previous example, related with the Duro, Cam, and also Rock liquidation of their partnership. So let us recall this illustration that we have used to discuss about the process of installment liquidation and also safe payment schedule. So just like this information, we would like to make sure that this kind of information would be used in the later illustrations too. So if we make a summary about the information related with the ending period of the Duro, Cam, and Road partnership, each of the partners has respectively for the capital balance is $340,000, $340,000, and $200,000. Besides this information about capital, we also have the information about the loan to Road. It is $40,000 and This is included in the accounts receivable. And the other information is the loan from CAM. It means that the CAM gives the loan to the partnership and its amount is to $20,000 and it is included to the accounts payable. So we have to also pay attention to the existence of these two information when we calculate about the Duro, CAM, and ROD equity at the end of the period. So, based on the information, the Duro equity would be 340,000. The CAM equity would be 360,000. It comes from the CAM capital, it is 340,000. And the other information about CAM is the loan. And the loan should be added to the capital. That's why the CAM equity turns to be 360,000. Meanwhile, for ROD equity, it is $160,000. It comes from the ROD capital that formerly $200,000. Meanwhile, the other information about ROD is there is a loan to ROD. Because it is accounts receivable, then it should be opposite position with the capital itself. That's why the equity resulted $160,000. So I hope that you understand about where the equity balance come from, and at any certain other information, you also have to pay attention to this kind of informations. Okay, after we know about each of the partners' equity balance at the end of the period, then now we would like to understand about the vulnerability ranking schedule. And this is the form of the schedule. We have to include the information about the partner's equity at the beginning alone. And after that, we also have to follow with the profit loss sharing ratio. And this information, just like we have mentioned before, it is based on the previous example illustrations. So for Duro, its profit and loss sharing ratio is 0.5. It comes from the 50%. Meanwhile, for CAM and ROD, respectively, is 30% and 20%. So here, the principle for making the vulnerability rankings is to assume how much the amount of the Duro, CAM, and ROD capital if it turns to be 100%. So we have to find the amount of 100% version of each partner's equity balance. For Duro, because Duro has 50% for profit and loss sharing ratio, so the 100% version of the Duro's equity should be found by calculate the result of $340,000 divided by 50%. And $680,000 is the result of the 100% version of Duro's equity. And we do the same for the CAM and ROD equity. We have to find the 100% version of each equity of the partners by dividing the equity balance with the percentage of the profit and loss sharing ratio. And based on the calculation, we have the results that the loss absorption potential for each of the capital is this amount. Here, when determining which one of the partners that has to be the first, the second, and the third in the rank of the vulnerability, then we have to determine based on the loss absorption potential. Here, the least or the smallest of the loss absorption potential means that it is the most vulnerable partners. So here, the smallest amount goes to the Duro, and that's why Duro is the most vulnerable to the losses. It is because the amount for the loss absorption potential is the smallest among these three partners. Then, if we would like to find which one of the partners that become the very least potentially to the vulnerability, it should be CAM, because CAM has the highest or the biggest amount for the loss absorption potential. So here we conclude that the CAM is the least vulnerable to the losses during the process of the liquidations. So based on this conclusion, we also have to pay attention to the road. It should be in the second rank for the vulnerability. The information about the vulnerability ranking should be used for the next step in making the cash distribution plans. Okay, everyone. Now we go to the second step for preparing the cash distribution plans. It is the assumed loss absorption schedule. So this is the form of the schedule itself. And first, we have to prepare for each the partner a special column. So they are the column for Duro, Cam, and Roth. For the first line of the schedule, we have to prepare the pre-liquidations equities. I think that this amount would be not a problem for you again because we have discussed before in the previous slide from where this amount comes from. The second line of this schedule would be the assumed loss to absorb Duro's equity. Why this should be the Duro's equity? Because based on the vulnerability ranking that we have decided before, Duro is the most vulnerable to losses rather than the other partners. That's why it should be in the first upon the absorption related with the assumed loss. So here we use the amount for the total is 680. It comes from the amount assumed as the loss absorption potential as the 100% version of the partner's Duro equity. Then here we have to allocate this $680,000 to each of the partners based on the profit and loss sharing ratio. That's why for Duro itself, it would be come back to the initial or the existing amount of the equity of Duro. It is 340 because it is the result of the multiplication between 50% with the $680,000. And for the Cam and Roth, it would be the same for the way to find this amount. It comes from the multiplication of $680,000 with each of the percentage in profit and loss sharing ratio. So that's why after the second line, after the assumption for the loss to absorb the Duro's equity, we had the balance for each of the partners would be 0 for Duro and this amount for Roth and Cam. So it means that the remainder in the balance that is still available up to this step is the Cam and Roth's equity. Meanwhile, for Duro is already 0. After that, the next step is the assumed loss to absorb the Roth's equity. Why this is Roth's equity? Because based on the vulnerability ranking, the second place for the vulnerability ranking is the Roth itself. Roth has the second position for the vulnerability. That's why the second step for the assumed loss that to be absorbed by the is the Roth's equity. But from where this amount come from? Now first we have to know the ending balance of each partners before it should be allocated by the deduction from the Roth's equity. It is 24 for the Roth. Just like we have done for the Duro's capital, that would be 0 at the end of the allocation. We have to be doing the same for Roth capital. So it should be 0 after we deduct the amount of the balance of Roth equities with a certain amount. So the amount should be the same with the ending balance of the Roth itself. So 24 minus with 24 would be 0 for Roth's capital or Roth's equity. And after that, we have to also determine the other information or the other figure in the line. So in this line, we have three figures, or we have three numbers. So besides the $24,000 itself, there are 36 and $60,000. So from where this amount come from? So based on this amount, we can determine this one as the second number or figure that we can find out, and the third one is this one. This is as the first, or the reference to find the other. So from this amount, we can find the 100% version of this amount. From where we can find this the 100% version of the road capital. It would become from, or by considering the percentage of profit and loss that had by the camp and road itself. So here, the camp and road total percentage in here is 50%. So here, we can try to find the 100% version of road by using this figure, the percentage of the road itself, and the total of both camp and road capital percentage. So here, the total, it should be assumed as X, or the amount that we try to find out. So X times with the 20 divided by 50 equals to 24. So from here, we can find out what is the X. It should be the 24 times with 50 divided by 20. And the results here is 60, just like we have listed in here, 60 as the total of this line. I hope that you are not confused up to this step. So we just find out the amount of the total for this line. And after that, we can find out too about the camp allocation from this assumed loss. So from this amount, or the 60 as the total for the line, we can find this figure by trying to minus the 60 with the 24. On the other way is by making the calculation for the denominator and numerator. It is the 30 divided by 50 times with 60. So the result would be $36,000. So after that, we can calculate the ending balance for each of the partners' equity. For Duro is already 0 from this step. Meanwhile, for Cam is 120. And for the road already 0 because it has been absorbed by the assumed loss in here. So at the end, the equities that still has a remainder amount is the CAM. It is 120. And remember this figure because we would like to bring this figure to the other step. Okay, just like I have mentioned before, there are 3 steps to prepare the cash distribution plans. And now we are going to go to the cash distribution plan as the third step for this cash distribution itself. So this is the main or the final step for the cash distribution plans preparations. But before we determine the allocation in the form of currency, we have to prepare first about the cash distribution plan in the form of percentage. So here, we still using the previous informations about the questions or the other informations related with the case to determine about the percentage. Here, we have to remember that besides the capital for each of the partners, the company or the partnership also has the liabilities and the CAM loan. The liabilities itself is actually the liabilities to the non-partners or the other parties, and for the CAM loan is the partner's loan or partner's liability, which means that the loan comes from the partners itself. So here, we remember that the amount of the priority liabilities or the non-partners liabilities is $500,000. So based on the principle in doing the liquidations, we have first to distribute the cash or the money to the other parties, regardless from the partnership itself. So we have to settle any accounts payable to the other parties. The amount of the liabilities to the other party is $500,000. Meanwhile, for the partner's loan is $20,000, and both of them assume as the 100% as the percentage of the payment or the settlement. So the first step in here is actually the distribution of the cash to the non-partners creditors, and the second step is the distribution of the cash to partners loan settlement. And the next step is remember about the existence of allocations to each partners. So here we have the partner is Duro, Cam, and Rod, and which one between among three of them that should be the priority for the payment. Here we have to pay Cam as the first. Why should we Cam? Because based on the previous information we had about the vulnerability ranking, the Cam is the third positions related with the vulnerability ranking. So it means that the Cam actually is the safest between those three partners. That's why it should be in the priority of the payment. So here we have to understand that Cam would be the first receiving the certain amount of money, and it is assumed as 100%. But why? Even though this already assumed 100%, then the amount is only $100,000. It is because based on the previous information, the allocation for Cam in here is $120,000. But we have to remember that besides the total or the overall amount that we have to prepare for Cam, there are also the payment for the Cam loan. So from both of the payment, it is for the Cam and also the payment for Cam in the term of capital itself, the total is already $120,000. Once again, it comes from these figures that we have prepared or calculated before. And after that, we can determine the next amount that we can distribute to Cam and Rod. Why this is 60? And it is also based on this information that we have calculated, that for Rod and Cam itself, we have determined $60,000 as the total. So from this total, we allocate to Cam and Rod. And why this is 60 and 40? Because for Cam itself, the percentage of the profit and loss is $30,000, and for the Rod is $20,000. But we cannot use this percentage to make the calculation or to allocate directly listed like here and like here, just like this. It is not okay because it is not resulting 100% from the sum. So here we have to make the calculations for the new percentage as follows. So here the total is 30% and the 20% would be resulting 50%. And after that, we can make the denominator and numerator just like before. So for the percentage of Cam would be 30 divided by 50 times with 100%. So the result would be 60%. Meanwhile, for this one, we can do the same. It is 20 divided by 50 and times with 100%, and the result would be 40%. So if you find out the other form of the percentage, you can do this way to determine the allocation to each of the partners after they already deducted by the other partners that not receive the allocation itself. And about the remainder would be allocated based on the initial profit and loss sharing ratio. So for Duro is 50%, for Cam is 30%, and Rod is 20%. And why Duro here receiving the allocation because Duro is based on the vulnerability ranking, has the position in the first as the most vulnerable to the losses. So it means that the priority for the Duro's allocations related with the cash would be the last rather than the CAM and ROT. Meanwhile, for CAM, as the most safest or the safest partners had by the partnership should be the priority for the cash allocations in here. I hope that you understand about the explanation to determine the percentage in the cash distribution plan. And after this, we would like to continue to the allocation in the form of currency. So it consists of a certain amount of money, not in the percentage again. So as the final step for these cash distribution plans, it is the form of the cash distribution schedule that would represent about the form of currency or money that would be delivered to each of the partners. And we have to add the information related with the assumption for the number of installment. So from this information, we can understand that there are two types of installment, the first and the second installment. And for the first installment, the amount of money that would be delivered is $550,000. Meanwhile, for the second installment is $250,000. So after that, we can make the cash distribution schedule that includes a currency or amount of money in here. So just like we have planned before, based on the cash distribution plan in the form of percentage, for the first payment should be delivered to the creditors. It is for the priority creditors, means the accounts payable to the other party outside of the company or the partnership. Just like before, the amount is $500,000. So the first cash distributed is $500,000 goes to the external creditor. And the second loan that should be paid is the CAM loan. It is $20,000. So here, the cash distributed already $520,000. Meanwhile, if we remember, the first installment only pay for $550,000. That's why the CAM capital as the remainder in here received $30,000. Why CAM? Because CAM is the first priority to receive the money, just like I have mentioned before. And this amount is the remainder between the total of the installment at the first installment minus with the total of the payment to the creditors, both for inside and outside of the partnership itself. And the next, for the second installment, CAM will receive the remainder of the money that he still not received. It is come from the $100,000 from the information that we receive in here. And after that, we also have the $30,000 already paid in the first installment. So in the second installment for CAM, only paid for $70,000. The next allocation is for CAM and ROT, which respectively both of them receive 60% and 40%. I hope that you still remember about from where the $60,000 come from. Of course, it comes from the previous calculations related with the allocation for both CAM and ROT after Duro already has a zero balance for the capital. And for the allocation for CAM is 36 and for the ROT is 24 based on this ratio. And the last, as the remainder allocation, it should be 120. Why this amount should be allocated? Because the second installment would be 250 and both of the CAM and ROT already received 130. So the remainder is 120, and this amount that should be allocated to each duro, camp, and road capital based on the percentage or the ratio for the profit and loss. And after that, we can calculate each of the partner amount of cash that would be received related with the process of the liquidations, specifically in the installment liquidations. So I hope from the explanation you already understand about the cash distribution plans, and we would like to have an exercise after these discussions, and see you.